Hi, this is June from Turning Point Life Investment. This is your weekend analysis for the week ending in October 24th, 2009. So in terms of price-wise, this week has remained relatively flat for the most part, with a slight negative bias or downside bias. Prices managed to tag that 110 level that we mentioned several times already in our previous analysis. That 110 was a very nice even number for the market to shoot for, and it tagged that level. Unfortunately, that's pretty much it. It didn't shoot any higher than that. So that 110 level was almost like a finish line for the Bulls. Now that they've hit the finish line, do they want to continue into another race, into another run, or is this it for them? So right now, the market is in correction mode. You can see how prices have been very relatively volatile these last several days. We had a lot of downside, a lot of upside, and then on Friday it finished with another down day. Overall, the trend is still up. It's still maintaining itself above this 20-day moving average. If it gets broken, more than likely we will probably retest this 50-day, which held successfully here. So again, a break of this 20, then this 50-day should be a decent retest. However, if there's more upside, a break above 110, and we'll probably shoot for 112 or even 114, which are the prior resistance we looked back in last year. Going into an hourly view, you can see how we've managed to stop at this gap around the 107.50 area twice. Okay, so it ended on Friday in this area. Overall, short-term wise, this week we've been relatively flat between 107.50 and 110. So any break above or below this range will tell us what the market wants to do next. If we get a downside break, we just look for the next gaps. Let's take away some studies. There you go. The next gap is somewhere around here, the 106 level. You can see there's definitely clear support. And the other ones will be somewhere around the 104.50-ish area. Okay, so these two levels I would definitely look for in terms of the next support levels. But again, if it manages to break above 110, then 112 or even 114 could be a potential upside target. But overall, the market, you can see it's in sideways correction, whether it wants to go lower or not. As I mentioned, we just have to wait for this. It's sitting on top of some pretty critical support right now. Okay, going into the sentiment, looking at the VIX, the current support level is 20. 20 has been tagged earlier this week, and it held as a support. So if 20 gets broken, then we know there's more bullishness and there's a drop in volatility, which usually translates to an upward market. Right now, it's staying in a range bound, again, just like the market, where the resistance is at 23, support is at 22. So any upside break back within this larger range could mean a deeper correction for the market. But if it stays sideways, then we know that it's just a minor correction. Overall, just to recap, given that we had some stellar earnings this week, such as Amazon, Apple, some pretty big names, and Google from last week, the market has maintained relatively flat. So despite the tremendous positive earnings with these big tech names, it didn't help lift the market any higher. So it makes me wonder if the upside surprise was already priced in right here. If that is the case, then you have to ask, what else can lift this market? If good earnings can't lift this market, then what else could potentially do that? And so far, I can't think of anything else. So if that holds true, then that could potentially be a bearish sign for the market. So in terms of trading, the trend is still up. You still want to be a buyer going long, but given that these signs are showing near-term top, you still want to be very, very cautious, even though if we're going long. Not until maybe even this 50-day moving average gets broken, then maybe we might want to change our stance into a more bearish stance. But overall, the trend hasn't been broken yet, so if it's not broken, we continue to do what's working.